This week we had Netflix earnings. We are just 5 days away from earnings from both Google and Tesla. Following that will be the rest of the FAANG stocks. What is going on, investors? Hopefully you guys are doing well out there. Got a big week and a big show for you today, and we better kick things off like we always do with Meta Platforms. Start of the week at 721. This one drifting lower for the first time in a little while, down about 2.5%. Finished the week close to 703. This is as Mark Zuckerberg continues to go all in as it relates to AI. He is going to spend hundreds of billions of dollars on AI, and he's going to bring the first 1 gigawatt plus supercluster online, I believe, by 2026. This was all telegraphed by Broadcom as they were reporting their earnings late last year, where they were saying there were multiple hyperscaler customers, which often includes a company like Meta, that were going to launch these gigantic clusters. That is all starting to play out now. Meta is just going to be the first of this. My guess is all of these companies outside of like Netflix will eventually launch their own cluster that is of this size, and they'll only get bigger and bigger because I guess when it comes to AI and maybe other things, size certainly does matter. Now, Apple has completely missed the boat when it comes to AI, but apparently they have employees that are worth poaching, as Meta recruited 2 additional key employees from Apple. This is after last week, as you might recall, they poached an engineer from Apple where he got a rumored $100 million signing bonus. Mark Zuckerberg tamped down those types of numbers in, I think it was an interview this week, but nonetheless, these people are getting huge signing bonuses to go over to Meta. Moving on to Apple. Start of the week at 209. This one drifting a little higher, up maybe about 1%, finish the week close to 211. That's after Chinese shipment data came in, and we did see that shipments of the iPhone, they fell by about 1.3% year over year in China, but this is a stabilization because if you go back to Q1, Apple saw a 9% drop, and then I believe we had earlier data where it showed month over month you have some strength there. We also heard from Taiwan Semiconductor earnings earlier this week, and they did note that because of the China stimulus, where the Chinese government is essentially giving you money to buy an electronic device like a cell phone, it's created some demand in the marketplace. Now, Huawei and other Xiaomi and other domestic providers there continue to dominate the smartphone sales inside of China, but it certainly has benefited Apple, and it does appear, at least in the shorter term, you have some stabilization. And again, we're just a couple of months away from a new iPhone. Now, speaking of new iPhones, you might get the one that folds open. That has long been rumored for the last year or two, and potentially that could come with a slightly lower price tag. Some believing the phone could cost as much as $2,400, but because of supply chain's adjustment could come closer to $2,000. Considering a MacBook is like $1,000 on the low end, high end $3,000 or $4,000, a $2,000 iPhone, certainly a high end device, but estimates believe they could sell 10 to 15 million units. And it wouldn't surprise me considering there'd probably be plenty of subsidies from the carriers and payment plans and those types of things. Now, speaking of a payment plan, Apple's thinking about getting on a payment plan to the F1, and they're going to launch a streaming deal with the high-end, and I consider F1 kind of this high-end consumer. They cater to the high-end. Now, it's not that like everybody that is watching F1 is loaded, but it does attract that kind of consumer, that type of advertiser. You look at like Louis Vuitton and Rolex and those types of sponsors tend to come in at this level. And so Apple looking to move into live sports. We'll talk about that maybe a little bit when we get to Netflix, but there's certainly this bidding war. And the one on the way out is Disney, as they had exclusive rights a lot to the sporting events for the past 2 decades, maybe even 3 decades. But now these major tech companies are coming in where a couple of $100 million or even $1 billion in the case of the NFL is actually not a lot of money for them. Now, moving on to Amazon. Start of the week at 224. This one, like a lot of these stocks, we're moving into earnings season. There's a little bit of a quiet period as it relates to making major news. You tend to, there's like insider trading raws that require a little bit of a dial back in terms of press releases. So we just saw most of these stocks going sideways. We also know that when you approach earnings season is often when you see the cost cuttings get implemented. You see people losing their jobs, including cost cuttings over at the US. I don't think this has anything to do with the demand over at AWS or data center demand. I think this has to be an AI story and just a right sizing of employees that these companies constantly do. Now, SpaceX, which is obviously one of Elon Musk's venture, they launch satellites into space, including their own that power the Starlink satellite system. Amazon is trying to compete with them with what they call the Kuiper satellite internet project, and they are boosting those up with SpaceX. So SpaceX giving a lift to potential competition. My guess is this will drive down prices in the future. Moving on to Netflix. Start of the week at $12.54, but saw its shares go in reverse. Down about 3.6% finished the week. We'll call that at $12.10. One of the first times we've seen a reversal in shares of Netflix in a while. You look at it technically, logical place for it to have a pullback. Now, revenue in the most recent quarter came in at $11 billion. That was 16% growth year over year. Beat expectations by a little bit. The guidance was actually for the full year came in a little bit higher. There are some concerns because of the live events and the increased spending. So profit and operating margins and maybe even free cash flow to a lesser degree lower at Netflix. They also tamped down things on the conference call, things like acquisitions or acquiring other companies or aggressively spending. They talked about buying back the stock, doing rather boring things, doing organic growth over at Netflix. Now, look, it's worked for the company for the long term, but considering the shares are essentially at all-time highs, buying back the stock is not overly attractive, but that's what the company will continue to do with their positive operating cash flow. All things being considered, it's pretty boring over at Netflix, and pretty boring is pretty good for this company. And I think you're probably 3 or 4 years away from $1 trillion valuation on that one. Moving on to Nvidia, start of the week at 163. And you see this big pop? That's an H20 pop. Up over 5.5% on Nvidia this week to finish the week at 172. That H20, which is a custom designed chip. It has slightly lower specifications, which means it's weaker than the chip that, we'll say first world companies or countries like the United States get access to because of sanctions put in place originally by President Biden and then carried on and actually ramped up by President Trump. The H20 was effectively banned, I believe, about a month ago. But after a meeting with Jensen Huang just last week, it appears that the Trump administration is set to reopen H20 chip supply into China, with the argument being that if China is going to build AI, and just like we are all going to breathe air, China will build AI, whether they're a step behind, 2 steps, 2 years behind the United States, it really doesn't end up mattering in the long run. When you look 15, 20 years down the road, everybody will be in about the same spot, just like we are with the internet and e-commerce and all those types of things. So the argument is, if they are going to build out AI, let's do it with an American company. It looks like the H20 is coming back to China, and that's billions and billions of dollars worth of revenue. This all appears to be tied to a broader negotiation and a trade deal and maybe even rare earths, as Trump sees the biggest asset, or one of the biggest assets in this trading relationship with China, are these Nvidia chips. He's leveraging that potentially to get what he wants, and that's access to these rare earth materials. We'll see how this materializes. Obviously, with President Trump, things can change at any time. Now, Trump plans to detail his vision for the U.S. role in AI development. This is probably largely coming from David Sachs, as not to criticize the president, but I don't really see him as a technology expert. And so he is going to rely on David Sachs, who also probably was very much instrumental, along with Jensen Huang, of getting this H20 chip back into China. They're both on the same page that China is going to get access to AI one way or another. They're either going to steal our IP or they're going to use our IP. And given those two choices, you probably want them to use it. And so we'll see what the president rolls out. And look, he's done some stuff in crypto. He's done some other things that people either agree with or don't agree with. But all in all, it is progress one way or another. This all comes as the Nvidia CEO is now in China meeting with top officials there about different types of foreign investments. And I'm sure the H20 is a big topic of conversation conversation and not related to Nvidia, but very much tied to the performance of those chips, among others, is that Broadcom started shipping a new Tomahawk Ultra networking chip. And by all accounts and all research that I've done, this is an exceptional product and it will fly off the shelves, very similar to Nvidia's products. If you're going to own two semiconductor companies, you know the two that you need to have. Now, moving on to Google. Start of the week at 181. We're just 5 days away from Google reporting their earnings, and shares bid up by about 2% this week to finish the week at 185. This came last week, right as I was editing the video, this deal with OpenAI and this company called Windsurf. This was announced maybe a month or two ago. Can't exactly remember the timeline, but OpenAI agreed to buy this company for $3 billion. Now, there was a lot of behind the scenes rumors that Microsoft was not happy about this acquisition. And as many of you know, Microsoft has a large stake in OpenAI and actually controls some of the decision-making and planning process the company is able to do. Now, OpenAI and Microsoft are trying to amicably split ways to a certain degree, and maybe potentially this Windsurf deal falling apart was part of that agreement that allowed Google to scoop in for $2.4 billion. I think they got access to some executives, some technology, and Google picking up the pieces there. Now, because cloud computing space is essentially sold out, especially on the high end, OpenAI has to turn to more than just Microsoft and even Oracle. They have to come to Google for a list of cloud infrastructure providers. And my guess is if they're going to use their infrastructure over at Google, it's probably access to their TPUs as well, even though that report has been denied. There is a digital advertising trial set for Texas that has been delayed, but we are just, I would guess within 30 or 40 days, we'll get that DOJ ruling as it relates to Google essentially being ruled a monopoly. As you might recall, inside of that case, one of the remedies is potentially breaking up parts of Google, including forcing the company to sell its popular Chrome browser and then potentially some of its advertising technology. That could create some downward pressure or maybe even upward pressure, depending on which way the ruling goes. So we're certainly closely monitoring that over here on the channel. Moving on to Microsoft. Start of the week at 502, up 1.5 to finish the week at 510. Microsoft plays it coy as it relates to Copilot adoption. They don't give us exact numbers, and it's actually hard to parse through the results whether or not it's making a huge impact from a revenue perspective. Copilot is an add-on for the most part. If you have an enterprise plan and you want access to Copilot because of the compute and it's not cheap, you do have to pay a little bit extra fee. Jeffries is saying that enterprise adoption of Copilot is accelerating, and we'll see when Microsoft reports earnings in just a couple of weeks whether or not they want to confirm that. ChatGPT, owned by OpenAI, launched a new set of agents, which are these things that you can program to, like, let's say you want to book a flight. You know, a lot of this stuff is kind of remedial type. I don't want to say it's like remedial, but a lot of this stuff is nice to have stuff where it's like, I'm going to Los Angeles, book me a hotel that's under $300 and in an area of the town where I'm not going to get robbed. And you can tell the agent that, and maybe it goes out and do that and you're still stuck in downtown LA. These things will get more and more advanced. Some of the examples that I have heard, I've listened to executives talk about these agents. Sometimes it handles supply chain. So imagine you're a company and you've got like a part list that is like 1,000 SKUs long. And then obviously as one part starts to dry up, you have to go and reorder it, and you need to make sure you reorder it in time for it to come and be replenished. So your supply chain and the factory orders keep going out the door. That's normally a human thing with a little bit of computer assistance. AI in the future will handle that entire task in the future, and it'll keep supply chains moving. Obviously, there's permission, there's cybersecurity. All these risks are in place. And so right now it's going to book hotel rooms for the most part, but in the future that'll be big technology. Moving on to Tesla. Start of the week at 316. This one just drifting higher into earnings. Nobody, I guess, wants to get caught short this one because Elon Musk can say whatever the hell he wants on the conference call. This one up 4% finished the week. We'll call that 330. Some Tesla shareholders wants Tesla to make an investment in XAI. This after XAI announced that Grok was available as, I think, an add-on or a feature inside of the Tesla car where you might be able to chat with it. I don't think it really does anything other than maybe you can, it basically just gives you AI access in the car. Some people want Tesla to make a direct investment in AI. Or XAI, the company. SpaceX, they don't have any of those types of restrictions. They're going to commit $2 billion. That's to the startup of XAI, which also controls Twitter, otherwise known as X. Broadly speaking, though, Elon Musk says he doesn't support a merger between Tesla and XAI, and I would agree with this. I think at some point, these companies could get a little bit too bloated. There's too many things going on. I actually prefer them to be separate like this, even though it does divide Elon Musk's attention and maybe his interest financially. I think it's probably better in the long run for both companies. Now, some product news is the Model Y is going to hit the India market at a $69,000, nearly $70,000 price tag in the great country of India. I tell you what, you got to be loaded. And there's a lot of people in India, a lot of people that are not doing well, but apparently there are a lot of people that can afford this. And that's what Tesla is targeting. Now, flying under the radar, not really caught by any investing news sites, is the fact that you're rolling out a new 3-row Model 3 SUV. It's slightly longer. I think it's 7 inches longer. It's another 1.5 higher. You can see there's like a gray version in the back and this red one in the front. I think they probably should have switched those from a color perspective. But this is like a longer Model Y. I think this car will sell. I think Tesla would sell a bigger vehicle here in America. People just like big cars in America. They like these big Escalades and these Suburbans and these types of cars, at least, especially where I live. I mean, everybody either has a truck or like one of these suburban cars. And so this kind of fits in kind of a weird area for Tesla where, yes, you do have a 3rd row, but I saw pictures of it. And unless you want your knees capped off or you're, maybe a young child, it's going to be difficult to get a full-size human being back there. But you've got 3 rows of seating and potentially a longer and likely more expensive car. Probably will sell some units. Now, a top North American sales executive departed the company as Tesla is moving, I believe, into a new phase. And I don't mind a reshuffling. We've seen over the past couple of weeks, as you know, we've seen a reshuffling of executives over at Tesla, primarily on kind of the North American and even international sales perspective. The company has done, obviously, a nice job getting to this point, scaling up a profitable electric vehicle, which really no other company has been able to do, certainly to the scale of Tesla. But now they have to transition into a new phase where they roll out new models. They probably have to advertise a little bit or do different types of things that the previous generation of leadership just weren't open to do. And getting some fresh faces inside of Tesla leadership, probably not the worst thing. We'll switch this back over to a daily view, and we've got the S&P 500 that has just confirmed a new higher high, just hanging out at those levels as you've got a plethora of earnings coming over the next 2 weeks, including, like I said, Tesla and Google next week. Pullbacks in the S&P 500, not alarming and are expected and should be bought rather aggressively. Meta pulling back at a relatively logical level. It confirmed a new higher high and is pulling back. This one doesn't report their earnings for about 12 days, so you've got another week on that one. Apple moved higher from this very clear support level at about $200 per share and is now just hovering there, likely wanting to do that for the next 2 weeks as you await earnings on this one. If the China data is any indication, then things probably will be decent enough for Apple. It'll be really how they talk up the future as it relates to AI and maybe potentially some other products. Amazon looking absolutely fantastic. We have not confirmed a new higher high on this one. I don't think it's overly concerning. This yellow line that I have here that you really can't see stretched out, that is what I would determine is the longer term trend. After earnings on Amazon, which don't occur for another 13 days, if you do get pullbacks to this 190 area, that's a good area to buy some shares. Moving to Netflix, this one made a new higher high, confirmed it, and then got rejected at a very logical level. The middle of the channel is back here at, we'll call it 1170. Be the first area if you're dying to get into Netflix to be at a buying opportunity. opportunity. Further pullbacks in Netflix should be purchased. Nvidia has broken to a new high. I've talked about this area at about 155, that once you broke above that on Nvidia, look, when you break to these highs, we'll show it to you on the Microsoft chart. When you break to these highs, there's often a lack of sellers at that area, and the buyers just materialize. Like that retail mindset that I'm going to buy high just kicks in, and these people start buying and the shares drift higher. Now, the thing is with Nvidia, they obviously, as most of you know, don't report earnings around the same season as the rest of these companies. They actually don't go for another 40 days. We'll hear from some other companies, and we did hear from TSM and ASML this week. For the most part, TSM just saying things are all systems go, and that's, supported by what Meta and others are doing. Google hanging out in the middle of the channel, likely waiting for that DOJ ruling coming in within maybe 30 or 40 days or so. We obviously have earnings just 5 days from now on this one. You get rejected lower, it's a buy, a move higher. Could be a profit-taking area, but we'll see which way Google goes. As I was saying during the Nvidia segment, once you broke to new highs on Microsoft at 465, it was a fast track up to 510. Microsoft doesn't report earnings for 12 days. I think it's going to be difficult for Microsoft to report earnings that will power the stock up even higher. It's not impossible, but I think the more likely scenario is you get a pullback in this one. A pullback to the previous highs of 465 is your first buying opportunity. And then finally, Tesla is still looking just fine. Technically, you are in this trend that has been materializing for about a year and a half or so. You're sitting very similar to Google, sitting right in the middle of the channel. You got 5 days from now. It's really going to be the robo-taxi hype, which is already off the ground. Didn't really talk about it on today's video, but they expanded the area that they're operating in Austin, Texas. Things appear to be going relatively well. The fact that we're not seeing mainstream media freak out about lane changes and those types of things, it probably means, thankfully, things are going pretty good for Tesla there, and there's been some rumors they might be able to expand to other markets. I believe we talked about that on last week's show. Obviously, the Optimus robot as well could be hyped up during the conference call, yet pushes higher with Tesla, will take you back into the $500 range. Wouldn't surprise me if we retest this area sometime in the next 6 months. Pull lower, your buying opportunities come down into the 260s, folks. That was the FAANG Stock Recap Show for Friday, July 18th. Hopefully, you guys have a great and safe weekend. Thanks for everybody that is subscribed to Equity Empire. We got a ton of videos. We did Bank of America, JP Morgan, Johnson & Johnson, TSM, ASML. I'm doing Netflix over there. I would say going forward, all my earnings videos are going, even next week, Google and Tesla. I mean, we've got so many loyal subscribers over there that I'm just going to be taking care of them. You will see me on Fridays, and we'll recap the earnings next week. Until then, have a safe and fun weekend, and good luck with your investments.